Thank you very much, members, students, affiliates, for joining in from across the region. Once again, a very important subject on taxation, which is very, very modern, which is very forward-looking. And if at all tax becomes a global discussion, this is that particular topic because of which tax is being discussed globally across countries, across economies. So we once again have Mr. Mohammed Awais back with us to deliver this very, very important subject. I'm sure your active participation, your questions, they're going to be a lot of help in making this session the best possible learning that it can be. So please feel free to ask as many questions as you want. Whenever we take the question answer break, we would want to address your questions. But before I hand over to Mr. Mohammed Awais, we are also making another announcement. Most probably this is going to be our last session before Ramadan. The next session, which is our last session on Pakistan tax, will fall on Monday, which is which is going to be in Ramadan. So our timing for the next session, we've just decided that we are not going to have a 2-hour session. We're going to have a 1.5-hour session first of all, and the timing are going to be from 3 o'clock to 4:30 p.m. Pakistan Standard Time. 3 to 4:30 Pakistan Standard Time, leaving us enough time to travel back home and to enjoy iftar with our family and our loved ones. So we will make this announcement once again, but on Monday, the last session on Pakistan tax is going to be from 3 to 4:30 Pakistan Standard Time. So please take a note of that. Feroz is going to change the webinar timing accordingly, so you'll get notices in your emails as well as the reminders that you get. So I think with that, let me hand over to Mr. Awais, who is going to take you through the international tax and trade agreements. So Awais, over to you.
Thank you very much, Harun Sahab. And again, I would like to thanks to ACCA Pakistan, and particularly as we were discussing offline that at this moment in the Pakistan, there is a lot of heated debate on the transition or no confidence move, which has been raised against the Prime Minister, and the people are focused that who will be our next prime minister, or whether the current government will continue and this motion will be fed. And at this moment, I was saying that the professionals obviously are dedicated, and instead of going and watching the TVs and the news, and we are trying to learn or discuss the tax provisions. So very dedication for the ACCA members, particularly who are joining at this moment and are with us. Surely we would have a discussion on certain computation parts, assessment parts, and my colleagues were there, and there will be a lot of discussion from both sides, from our side and also from the participation side, because I strongly believe while discussing any law, no one can claim to be the expert of the law. Even I can't say that my opinion will be the final opinion, because the law is such thing that whenever we will debate, we will learn. Whether I am moderating a session, whether I am delivering a session, I'm just in a learning phase, because it always encourages that the two-way communication. And as Harun Sahab has rightly said, that we learn from your question, we learn from your arguments. And from the tax side, obviously the arguments are material. So for everyone, we must have the capacity to listen the thing, what the other person is saying at the one point of time, then forming our own opinion by having the knowledge on the subject and also the listening the argument of the other person, and then having the same capacity to differ or to accept the argument. And that is the process wherein each party learns. So my request obviously to all of the audience is that that there is here, you can't say the one is the delivering the lecture or the things. You can also consider that I'm trying to learn from your experience, from your views. So your views are quite valuable for me. So now with these, we'll be moving towards the subject, and today's it was a quite important because whenever we go into the taxation side, one part is very focused on the how the domestic incomes earned by the resident individuals is going to be taxed. So primary focus is on that, and with the passage of time, when the globe is going very close, the people are moving from one territory to other country territory, and also there are number of cross-border transactions entering into the each territory. So the role of international taxation is very important at that point of time, and particularly for the ACCA member, ACCA being a global body, obviously the members are moving from one country to the other country, and similarly dealing with the even the multinational organizations wherein the international taxation becomes a very important subject. So we will be discussing the relevant provisions which are important for this area. So our first in this presentation we will be focusing on the two parts, basically how the international taxation is dealt under the Pakistan tax law while reading along with the double taxation agreement signed between Pakistan and the country of the residence of the person who is earning that income. And similarly, we will be also having an overview of the trade agreements entered between Pakistan and the other territories and the regions. So in the first part, obviously, we will be discussing the international taxation. And as we already in the introductory session, we have discussed that whenever the tax obligation or tax liability is calculated, we have to make the segregation of the person, whether the person earning the income is a resident or the non-resident income, because we have to follow the principle that the resident is going to tax in respect of total world income, whereas the non-resident will be going to tax only in respect of Pakistan source income. And when I link with this international taxation, so my focused area will be the foreign source income of a resident person as well as the Pakistan source income of a non-resident person. So these two areas we will be discussing today in this session. Um, when we go, obviously, just a quick run through that resident individual is the person who is in Pakistan for 183 days or more in a tax year, or is an employee of a federal or provincial government. Similarly, the company will be the resident if it is incorporated under the laws of the Pakistan, or its management or affairs are wholly situated in Pakistan. Or third category is a provincial government or a local government, because these two are also taxable under the category of the company. So these will be resident company. And similarly for resident AOP, if the controls or affairs of the management are situated wholly or partly in Pakistan, so then it will be considered as a resident. And if a person does not qualify for any of the condition, then that person will be considered as a non-resident person. Just a brief quick run through, because I think we have already discussed this in the first session, and also in the subsequent session my colleagues would have been discussing on this topic. Similarly, the other thing which is very important as we discussed, because when we say the resident is going to be taxable in respect of total world income, whereas the non-resident is taxable only in respect of Pakistan source income, then definitely we must have an idea that how the income will be considered as Pakistan source. And for this purpose, there are two things which are very important for any person while determining that this income is a Pakistan source income or not. That firstly, we will go and see what our local ordinance provides for. So section 101 is the relevant section which is it is provided in the Income Tax Ordinance 2001, and that is the relevant section for determination of geographical source of any income, and particularly determining whether it will be a Pakistan source or not. And whenever we will be dealing with any of the transaction wherein the two jurisdictions are involved, that like if I'm a Pakistani resident and earning any income from abroad, or any non-resident person is earning any income from Pakistan, then obviously the role of the double taxation agreement should not be ignored while forming any of the opinion. So we will discuss it in the later part of our session, but starting from the local ordinance, because whenever you will have to go into determination of the taxation or anything, obviously the starting point is our local law or the Pakistani income tax ordinance, as we said that the relevant section 101. So this provide for various situations that how the income will be considered as Pakistan source. So some of the important provisions, that is the salary. In case of the salary, if it is received from employment exercised in Pakistan. So if even I'm a foreign national, I'm a US citizen, but I am providing employment in Pakistan, my employment is exercised in Pakistan, then wherever I receive the salary, even if salary is paid outside Pakistan, still it will be taxable in Pakistan. And the second thing which has been considered for the salary, because the employees of the federal government, provincial government, or local government are sometime working abroad. So in that situation, even if the employment is exercised outside Pakistan, but it will be considered as Pakistan source income of those persons. So these are the two parameters. One important parameter for generally applicable for all persons, that is where the employment is exercised. So if my base of employment is within Pakistan, so any salary earned on account of that employment will be taxable, whether it is paid in Pakistan or outside Pakistan. So I will just take an example. If I'm an employee of a multinational company looking into the Pakistan operation, but my base is, let's say, UAE, US, or UK, and while sitting outside Pakistan, I'm looking the affairs of the Pakistan. So my employment is exercised outside Pakistan. If I'm getting salary abroad against those services, or it may not be considered as the Pakistan source salary because my employment is exercised outside Pakistan. But on the other side, if I'm based in Pakistan, I'm working in Pakistan, and providing services to any entity, though now my employment will be exercised in Pakistan. So in this case, I will say, let's say a US company hires me while working here in Pakistan. I'm stayed because now after the COVID, the people have learned that how the person can work from home, from the distant locations, how they can provide services. So if I'm an employee of a US company while exercising my employment while staying in Pakistan, so this will be my Pakistan source salary, and it will be taxable here in Pakistan. And exception, as we already discussed, because the employees of the federal government, provincial government, or local government, even if they are exercising their employment outside Pakistan, so they will be taxable here in Pakistan. Similarly, while moving ahead, the other is the dividend. Dividend is very common income because any foreign investor is making investment here in Pakistan by establishing any company here in Pakistan, and the dividend are remitted from Pakistan to abroad. So the recipient of income, consumer of the income is sitting outside Pakistan. But if the dividend is paid by a resident Pakistani company, if a Pakistani company makes payment of any dividend to any non-resident, it will be considered as the Pakistan source income of Pakistan. So it is taxation obviously will be dead. It is taxable under the local law. Yes, we can read with the double taxation agreement, because in double taxation agreement, sometimes some relief have been provided, some exemption have been provided, or reduced rate taxation, but it will be considered as a Pakistan source income. Similarly, a few years ago, now they have also added one more thing, that if a branch of a foreign company is remitting any profit from Pakistan outside to outside Pakistan, it will also be considered as dividend, because this is the basically I can only say it has removed the discrimination, because if the entity has formed, let's say a company established a wholly owned subsidiary in Pakistan, and the dividend is remitted into from the Pakistan, it will be subjected to tax. But on the other side, if any entity does not establish a Pakistani subsidiary, rather establish a permanent establishment or a branch office here in Pakistan and remit any profit, then still it will be equated on the same manner and it will be taxable under the head dividend. Just one moment, I can adjust my slide here. So next very important topic is excuse me, that how the business income will be considered, because it is the most important and I can say the most disputed topic, because income from business has a very wide connotation, has a very wide, I can say, the applications, and it has to be always debated under the local ordinance as well as read with the treaties, and the people have a difference of opinion. So there are a number of cases on that what will be the Pakistan source business income. But as per section 101, where if any income is attributable directly or indirectly to any PE of a non-resident. So if in Pakistan, if any entity is working or holding as a permanent establishment in Pakistan, so any income earned by that PE will be considered as Pakistan source business income. Though the concept of the PE obviously is very important, and so in every treaty, this provision is very important, that how the business income of a non-resident person will be subjected to tax in Pakistan, when the PE will constitute. So each treaty is described in a very elaborative manner, and similarly, our local ordinance also provide the explanation of the both situation. Because how it will be determined that the foreign person is holding a PE in Pakistan is depending upon the person's operations, place of management, holding a branch office, workshop, any factory, any commercial establishment where that person is receiving any order or making marketing of the product. Other than, there is only one exception here, that if a foreign company is maintaining any license office in Pakistan, and that license office is not directly involved in negotiation of any contract, in that situation, that license office may not be considered as a PE, whereas in rest of all such situations wherein there is any office, branch, public, so that will be considered that the person is holding a PE in Pakistan. So I believe our majority of the colleagues would be aware the concept of the liaison office, because the liaison office, whenever the foreign entity want to come for any initial promotion or for any sport function, they can apply to the Board of Investment and get the permission to hold a liaison office. And liaison office is always considered as a non-commercial office. While granting the approval, it is very clearly stated therein that no commercial activity will be conducted in Pakistan. Even that office may not be involved for negotiation of the contract. So that is the part which has been excluded. So rest for even the promotion of their product or for providing any sport after sale sport function or anything which is not considered as installation, commissioning or project. So if that is not the work, then those offices will be excluded from the ambit of the PE. Similarly, if a non-resident is holding any rights on the mine, oil and gas well, or any query or extraction of natural resources product or anything, So that will be considered that the person is holding a PE here in Pakistan. Similarly, any agriculture, greenland, forestry, poetry, property, if is there, then obviously all these situations will be establishing a PE. And for respect of construction contract, a building, construction, assembly, installation project, even if any of the such project is conducted by a foreign person, that will be considered as having a PE. And one is very interesting, and that is the furnishing of services, because even sometimes it's a very disputed topic that if a non-resident person is coming here in Pakistan, even staying for a few days and providing any consultancy services, the law is provides that it will be considered that the person is having a P in Pakistan. And as I already discussed in the previous slide, that if a person is considered that the person is having a PE in Pakistan, it's in any income earned in relation to that PE will be considered as Pakistan source business income. Here is a very thin line, and that is required to be focused very, that whenever a person is having a PE in Pakistan, so now which income will be considered as Pakistan source? So that rule is that any income attributable to that PE, meaning that if you are conducting any activity by way of using that permanent establishment and the income is attributed to activities of that PE, those part of the income will be considered as the business income of a non-resident person. And because I will take as an example, let's say I'm selling goods from US entity. There is a US entity which is selling goods in Pakistan, and there is a one PE in Pakistan. And now those goods are sold through PE by way of marketing or anything. So any income attributable to that sale which is conducted through PE, that income will be taxable. But on the other side, if there is a direct sale by the non-resident person from abroad, so that income may not be considered as attributable to PE, and one can argue that that income is not taxable here in Pakistan because that is not attributable to the PE. But here the exception has been created. If you see the second bullet, that if the sale of goods or merchandise is of the same or similar kinds which have been conducted, for which the business has been conducted by the PE, then in the same situation that income will also be considered as Pakistan source, because here the relevance comes that it will be seen for the tax purposes that this sale has been made by the marketing activity of the PE, because the same product or the similar product are sold even directly by the non-resident person, but still it can be attributed to that PE and that income will be taxable. Similarly, if in case of any other business operation or services, if the person is holding a PE here in Pakistan, and on the same side, if providing the similar services directly without the involvement of the PE, but still it will be considered as the income, Pakistan source income and attributable to the PE in Pakistan. So these are the situation with reference to the PE of any person, that income directly earned by the PE or sale of goods of the similar kind is made in Pakistan, or any other business activity or services provided of the same kind which have been services or activities have been executed by the PE Pakistan. So all these income will be considered as Pakistan source income. There is one more thing, and that is a very recent introduction in the law, that is the concept of the cohesive business operation. And basically, there was one old, I can say, the concept that sometime the foreign company was providing or selling plant and machinery to Pakistani company, and either the same company through PE or any of its associated entity was providing the installation, commissioning services of that plant and machinery. And the contract was broken into the two parts. One was the supply part and one was the services part. So it was considered that the supply has been made from abroad, and any income earned by supply of goods from abroad may not be subjected to tax in Pakistan because it may not fall under the definition of the Pakistan source income as we discussed earlier. But here there is a concept which has been introduced that is called a cohesive business operation, wherein if the supplier of the goods is the same person who is providing the installation services here in Pakistan, either directly uh, through I can say that directly by establishing its PE or permanent establishment in Pakistan, or by its having any associated entity, because sometimes the foreign company has the associated companies in Pakistan who are providing the installation services. So the tax law says that if the both activities, the supply of goods and the execution of services, is provided by one entity, and it is an overall arrangement wherein the both activities are performed by one entity. And here the when we say the entity means the group of entity, whether directly or through associate. When the associate, we will take the so although the legally they will be separate legal entities, but for tax purposes they will consider as a one group of entities. And so they say that this will be considered as an overall arrangement of cohesive business operation, wherein the both entities are working with the support of each other. And if any services or any part is, even the import is made as an overall arrangement of a cohesive business arrangement, so in that situation, any income allocable to import of goods or export of goods from abroad, so that part will also be considered as Pakistan source income. So as we already discussed that the previously the supply part, if was made from abroad, it was not going to tax. But now by introduction of this provision of the under section 101, so if the import of goods is made as an overall arrangement wherein the construction, assembly, installation, or even the principal or supervisory activities are performed by the same person or by its associated entity, so this will also be considered as Pakistan's source income of the non-resident person. So, so this is all briefly I can say in respect of the income from business, and which is very important aspect while determining. And this I can say the majority of the disputes comes under the umbrella of this, that how the Pakistan source business income will be calculated. Now, moving towards the next, that is the how the income from independent services will be considered as a Pakistan source. Because if a non-resident person is providing any service to any resident person, if I'm a Pakistani entity, AOP, or the individual, and I am obtaining any services from the non-resident person and remuneration of those services is paid from Pakistan and claimed as an expense of a Pakistani company or Pakistani entity or a permanent establishment of a non-resident entity, then in both situations, if it is claimed as an expense and paid by the Pakistani person, it will be considered as Pakistan source income of the foreign non-resident consultant who is providing these services. So this is about the independent services. This concept comes because the concept is different, and to some extent I can say very similar to income from business, but here the concept comes the independent consultant, the role of the independent consultant. If Mr. A is providing consultancy services, he is coming to Pakistan or providing services to any entity, it will be considered as independent services. Whereas A, being an employee of the company, if employee of a, let's say, US company is providing services to Pakistani entity, it will be considered as the business income of the US entity. So these are little bit related topics, income from business and income from independent services. And the only difference is that who is providing those services. If the entity is providing services, it will be taxable under that income from business, and those rules will apply. And if the services are provided by an independent individual, it will be considered as income from independent source. Similarly, royalty is also been considered that if it is paid by a Pakistani entity, so it will be considered as a Pakistani Pakistan source royalty if it is paid by a Pakistani person or borne by a permanent establishment of a non-resident person. So this is the basically source. If you will see these things, these are focused on source of income, that whether if income is generated from activities or utilization of any rights or anything, this will be giving rise to Pakistan source income. Like if I am using a brand of any foreign entity in Pakistan and I'm making payment of royalty against that brand, if that is used within Pakistan, so this will be, although the payment is made to a non-resident person who is sitting outside Pakistan, who is owning that brand outside Pakistan, but being the fact that that brand is going to be used in Pakistan, so any payment made on account of that usage will be considered as the Pakistan source income. If I, being a Pakistani national, let's say I'm running restaurants here in Pakistan, and similarly the restaurants in Dubai, and I have taken the brand from US, so any payment made on account of the Pakistani restaurants will be considered as Pakistan source income. Whereas if I'm using that brand in UAE and any making payment from the UAE for that brand, that will not be considered as Pakistan source income. So in the royalty, obviously, there are a number of things that the use of the brand, copyright, patent, invention, model, process, or secret process, or the formula, all these things, any payment on account of this is covered under the head royalty. There is also one a litigation on account of royalty also, that the royalty will be considered only for those points if it is paid in connection with usage of any right for which we are earning any income. Like if a Pakistani entity is using any right, brand, model, secret process, formula for the purpose of generating any business activity, then it will be royalty. But if on the other side, if I'm using any such thing for my own business activity, like there is a reported judgment that if I'm using right, if I'm making payment against right to use the software, and that software is used only for my internal accounting, for my internal things, for using for the, although using for the purpose of business, but not as a right to sell those rights, but rather right to use if I'm taking, so that will not be fall under the definition of the royalty. But if I'm a, let's say, distributor of the Oracle or the SAP, and I've taken the license for resell here and are making any earning here out of the reselling or using that brand, so that will be the royalty definition. So there is this line in between the royalty, that when it will be Pakistan source taxable income and when it will not be taxable. Similarly, for fee for technical services, that is also very important. And when we will be determining that if we are making payment, any consideration for the services in relation to any technical consultancy or managerial services, so this will be considered as technical services. But here there is an exclusion if it is related to construction, assembly, or the project, they are taxable separately. And similarly, if the arrangement is that the service provider and the service recipient are under the employment relationship, that will not be categorized as a fee for technical services. But on the other side, if any consideration is paid by a Pakistani person or a PE of a non-resident person, it will be considered as the Pakistan source fee for technical services, and it will be taxable here in Pakistan. These are the basically different lines that wherein we can say that if a non-resident person is earning sources from Pakistan how it will be considered as Pakistan source income and it will be taxable here in Pakistan. And on the second side, if we see on the that whether how the foreign source income of a resident person will be taxed. So this is the second side of that. And before moving to that, I will just check from Feroz Saab or Harun Saab whether when we are expecting to have a break for Maghrib prayer, or we can take questions here for the portion if we have some time.
I think we should take a break in the next 5 minutes, if that's all right.
Yeah, then we can take some question particularly focusing on the income of the non-resident person from Pakistan. So Pakistan source income of a non-resident. This topic approximately I want to close before moving towards the foreign source income of the resident person. So if there is any question focused on that, we can take few questions before the break.
Okay, so right away, I think Shabazz Makhdoom has sent in a question, and the question is, how's freelancing service categorized? IT services, IT-enabled services, or fees of technical services? So would that fall under the category you've explained, Avesa?
Yes, yes. Basically, if a freelance service, firstly, we are here focusing on the income of the non-resident person. So person is sitting abroad, providing any services here in Pakistan. You have, because on the other side, if your question is focused for the freelancing services provided by the resident, I will cover in the next part. But here I will answer in respect of the freelancing services provided by the non-resident person. So if a non-resident person is providing services here in Pakistan and that person is a company, so any income earned from Pakistan would be considered as income from business. Whereas if it is a fee for technical services, so it will be categorized under the head specifically as a fee for technical services earned by the non-resident person. And here the rule will apply the specific versus general, that whenever the law provides any method of taxation specific to any category of income, and then the general rule will not apply and the specific rule will apply. So if any services have been provided by a non-resident person and that will fall under the definition of fee for technical services, these services will be taxable under the specific head of fee for technical services instead of going to be taxed under the head income from business. This is one principle. And the second principle is that if the service provider is an individual and providing any services to a Pakistani entity, so these will be considered as the services of independent nature, and it will be categorized as the head income from independent services. So if it is not fee for technical services and provided by an individual, it will fall under the head income from independent services. And if it is provided by the company, it will fall under the head income from business. I hope you will understand the situation.
Yes, I think quite clear. Thank you very much. If there are any further questions related to this topic, you can post now. Otherwise, I think we'll proceed on to for our prayer break for 10 minutes. So any questions? We're waiting for questions in the questions dialog box if anybody else has a question to ask. Yes, Shehbaz Makhdoom again. And he's saying, how do you differentiate between independent services and technical services?
Yeah. Actually, Shabazz, it's very important. Frankly, it's a very, very important thing which you are raising, because if you see the definition of the fee for technical services, it provides the managerial, technical, or consultancy. So these are the three words which have been provided, and under the law, there is no definition of managerial, technical, or consultancy. Rather, we have to go I can say the legal dictionaries or the court rulings are the things. And when I personally think the majority of the services can be categorized under any of these three categories. So the exclusion will be only the construction, assembly, or installation project, which has been specifically excluded. And the second exclusion is if the relationship between the service provider and the service recipient is of an employment nature, so this will be excluded. So the rest will be this. And but if in any case, if it is of any general nature service, which will not be categorized as managerial, technical, or consultancy, then it will be categorized under the head independent services. So that is a residual clause. I can say that firstly, you have to check whether this will fall under these categories. If does not, then you will go into the residual clause and the rest area will be parked therein. And particularly when we are reviewing any subject or making any opinion on this, we have to consult number of case laws and also the double taxation agreement, because this we are at currently we are discussing the provisions of our local law. And whenever the transaction between a non-resident and a resident person is, we also have to consult the definitions of these terms provided in the double taxation. So some of the guidance we can take from there, but you will be, you can see that the technical definition of technical services almost in all treaties is also considering the same thing, that the managerial, technical, and consultancy, all three terms have been considered as a technical service. So this is little bit confusing, but yes, the reply can be that the first test is whether it falls under any of these categories, then we will consider it as a technical service. If we are able to exclude it from any of this category, then it will be considered as fee for independent services.
Thank you very much. And I think that leads us nicely to our prayer break. We will take a 10 minutes prayer break here. If in the meanwhile, any question comes to anybody else's mind, you can type it in. When we resume at 7 o'clock, we will have a quick look at any questions and then we will continue with the topic of discussion. So thank you very much. 10 minutes prayer break and we will resume at 7 o'clock sharp. Pakistan time. Okay, thank you very much. We are back. And if we have Mr. Abbas back as well, let's just wait for a couple of minutes.
Please, I'm here.
Okay, thank you. So, Abbas, I think one final question from Shabaz Makhdoom is that he's first of all appreciating your answer. And then he's saying that if you can please tell me the section governing independent services. So if that you can share with him, I think that's the only question we've received so far.
Basically, section 101 deals with all sort of provisions wherein the Pakistan source income from various heads have been categorized. And independent services, there are certain articles therein and of the double taxation agreement which provides a separate taxation from the independent services. And similarly, the section 101, the last subsection of that is also dealing with that if any person is earning any income which is claimed as an expense by a Pakistani person, that will also be considered as Pakistan source income. And particularly for independent services, that will be the section 101, subsection 4.
Okay, great. Thank you very much, Wesab. And I think we can resume now. So if you're all back in, let's continue.
Yeah, please. Now, moving towards the next segment, that is the because as we discussed in the start that whenever there will be the concept of the international taxation, that will be Pakistan source income of a non-resident person, and we have discussed certain areas, certain provisions that how this will be the governed and will be considered as Pakistan source income. And on the second side, now we are discussing because a resident is going to be taxed on the basis of total world income, which is comprising of Pakistan source income as well as foreign source income. So the rules which are generally applicable, that because the resident person is going to be taxed on worldwide income, so how the general rule will apply. Firstly, there is one exemption, and specific exemption in section 102 is provided that if a Pakistani resident is earning any foreign source salary, so that will not be subjected to tax in Pakistan if the person has paid tax on that salary income in the country where that salary income has been earned. So if the basically why this provision has been provided, that because if you will see the residential status of individual is linked with the number of days stay in Pakistan. If the person is a resident in Pakistan for 182 days, meaning thereby the 6 months, and after that a person is moving, let's say in the I moved outside Pakistan for last quarter, so for that year, I will be the resident. And now, if I'm earning any salary income from abroad, it will be subject to tax here in Pakistan. But if I'm paying tax in outside jurisdiction, then that income will not be subjected to tax here in Pakistan. So that is one specific exemption in case of the salary income. And the other rule is that if I have earned any income from abroad and I'm paying tax in the relevant territory on that income, so now when I will come in Pakistan, I will consolidate that foreign source income with the Pakistan source income, will calculate the total tax liability on my total world income, and out of the total tax liability, I will claim the foreign tax credit. That that tax credit, the formula has been provided here in Pakistan, that if whatever the amount of the foreign income tax paid or Pakistan tax payable in respect of that income is, so lesser of that will be deducted as a foreign tax credit. And because in Pakistan, I am calculating the total tax liability on total worldwide income firstly. Say I earned $50 from US, $50 in Pakistan. So my total income for the year is $100. In Pakistan, assume 10% rate is, so $10 will come on Pakistan. Now I will allocate that how much uh, tax will be allocated to foreign source. So it's a 50% is the foreign source. So 50% of the tax will be considered as the tax payable in respect of foreign source income in Pakistan. So that will be the $5. So I will compare this $5 with any tax paid outside Pakistan. Say outside Pakistan, I paid $3. So I will be eligible to claim tax credit of $3 out of my total tax liability of $10. So lesser of Pakistan tax or foreign tax will be claimed as a tax credit here in Pakistan. And similarly, the other thing is very important that whenever we will be calculating the foreign source income, we will keep, because we will deduct any expense related to that particular activity out of that income, and then net income will be taxable here in Pakistan, because this rule is generally applicable in case of services provided outside Pakistan, business income earned outside Pakistan. So if I'm traveling outside Pakistan for providing any those services and any directly attributable expenses incurred in order to earn that income, let's say I'm paying using the internet facility, telecom facility for providing any such services. So any cost incurred for that will be deducted out of the income earned from abroad, and net income will be considered as taxable income. Similarly, in some cases, sometime you have to incur the loss, particularly in the business situation. If we are earning any business income from abroad and I am incurring any loss there too, so that loss will be kept separately. It will be carried forward for 6 years, but it will be set off against the foreign source income. So when we see the carry forward and the setup of losses rules here in Pakistan, so we have to distinguish that whether the loss is out of any Pakistan income or it is due to the foreign income. If the loss is due to the foreign source income, it will be only set up against the foreign source income in the future 6 years. And if the loss is due to the Pakistan source income, it will be only set up against the Pakistan source income. So this is a line which we have to understood while making any adjustment of the losses against Pakistan source or the foreign source income. So these were the general principles related to taxation of any income earned by a resident person from abroad. So now I will be moving towards the next component, because that is the non-resident persons and the double taxation agreement. Because have to be very mindful that our law provides a section 107, which provides an overriding effect to any double taxation agreement signed by the government of Pakistan with the outside Pakistan. And when we see these agreements, there are the basic objective is there are two, three basic objective. One, that there should not be any double taxation on any income. So because if you will see, there are certain rules, because the income is going to be taxed either on residential status of the person or on the basis of source of the income. So even if certain territory tax me on the basis of total worldwide income on the basis of my residential status, and on the other hand, the other territory taxes that income on the basis of the source arising from that territory, so that income will be going to be taxed twice, once in the country of the residence of the person and on the other country of the source of that income. So these situations have to avoid it, and the governments have signed the agreements in order to provide benefit or say avoidance of double taxation. So this is the one basic principle. And on the vice versa, these also provision deal in certain situations that one cannot take the shelter of that my residential status in the other country and is going to avoid any taxation in the country of the source, and in the country of the residence that person takes a plea that because this is not the source generated from this country, so this should be taxed this should not be taxed in the country of residence. So the both meaning avoidance of double taxation as well as avoidance of taxation on any income due to these different rules. So these both situations are catered under the double taxation agreement. Similarly, this also provides the assistance in the recovery if the resident of the one of the country is liable to make payment of tax in the other jurisdiction. So countries can obviously coordinate with each other and can recover those taxes. Now there is also after a recent, if you will see, there are number of the recent projects and the things. One of the OECD very famous project was the BAPS project, that base erosion and the profit shifting, because there was a lot of hue and cry from the countries, even from the developed countries. The US was saying that the companies who are resident of even US and they are now trying to shift their base and shifting their head offices or the registered offices in such territories where either there is no taxation or there is low taxation. So they normally find the tax havens, they park their incomes there, and so they are trying to avoid the payment of taxes in their countries. So in that situation, obviously the countries were thinking, and the basic focus was going into that how we can go into the principle for taxation in the territory where the source of the income is. So the rule for having the registered office or the principal offices or the parent post status, so these can be avoided. So these are the projects on which even the developed countries are working, and also the underdeveloped countries are the part of those processes so that the taxation can be made. So for that purposes, obviously there is a lot of information which is required to be exchanged between different territories. So that one is the objective that would be considered, and the information exchange could be made on a very smooth manner. So one countries are sharing information with the other. Similarly, now they have also signed that now automatic and spontaneous exchange of information, that because you will see that the recent amendment for the country by country reporting is there, and some of the multinational entities who are making transactions in the multiple jurisdictions, they are required to submit certain information even in the country where they are making transactions, even in their parent country residence where their parent company is located. So information related to the transfer pricing and how these are going to be. So for all those purposes, the governments need the information on prompt basis. So they have to be exchange information with each other and provide therein. So these double taxation particularly focus avoidance of double taxation, relief from any tax payable, or determination of the Pakistan source income. Similarly, if the operations are not carried out within one territory, so the determination becomes very important, that if the part operations are in one territory and the part are in the other territory, so income, how much income is attributable to the each activity. So that is important, and that are dealt under the double taxation agreement. So these are the main key areas which we can focus while discussing that how are the objectives and the things are for making the double taxation. In that particularly, if I'll see that in the double taxation agreement, there are number of agreement types. Number one, that is very important, that is the bilateral agreement. And similarly, there are multilateral treaties. Bilateral agreements are between two countries like Pakistan, UK, Pakistan, US, Pakistan, Saudi Arabia, and multilateral treaties are sometimes for the basis of some region, group of entities, or anything that will be considered as multilateral agreement. So these bilateral agreements particularly have been made between various countries, and there are two standard models on which these tax treaties, we call it double taxation agreement, we call it tax treaties, or we can call it as a bilateral agreement. So these are all similar terms used for these. and these are based on two models. One is OECD model and one is UN model. So the main difference between the UN model is much more focused on the source of that income as compared to country of the residence. So these are the things which have been considered. But in Pakistan, the majority, some of the treaties are on UN model, but majority are on OECD model. Treaties have been adopted by the Pakistan. Uh, if you see there are even the multilateral agreements are there. These multilateral agreements are for the mutual administration of a tax matter in a way, in a different territories or in a different jurisdiction. Like I already said, that the recent agreement is for exchange of country by country report. This is a very recent agreement. And similarly, agreement on exchange of financial account is made. Previously, there is 2004, I think, in SAARC agreement, multilateral agreement was signed between the SAARC countries. This BAPS project is OECD project, and this multilateral convention and BAPS have also been signed recently. This this BAPS project is just signed on the by Pakistan, because there are a number of countries who are the signatory of this BAPS project, and Pakistan signed this agreement on 7th of June 2017, which is effective from 1st of April. And if you will be the persons who are in the tax practice, they will be noticing that after April 21, the government was issuing notices to the individuals who are maintaining accounts outside Pakistan, are holding properties outside Pakistan. So these, under this agreement, the countries are now reporting or sharing information with the other tax authorities of the other countries. So under this agreement, obviously the government of Pakistan is receiving information, as well as also the government of Pakistan is also maintaining any information relating to resident of the other countries that will be shared with them. So these projects help in exchange of information there. Similarly, now the recent MLI, which has been multilateral agreement, it is also very important, because under the existing treaty, some people were taking advantages and making the tax planning on the basis that if the tax treaty provides exemption from any particular source of income on the basis of the country of the source, then that was going, and the parent co is let's say established in any tax haven, so that income was going to be avoided for taxation. So this problem was majority in OECD model treaties. So they have covered now in under the multilateral agreement, they have now addressed this issue. And whenever the country like Pakistan has signed that multilateral agreement recently, and also some of the other countries are signing. So if the two countries have signed that agreement, so when we will be studying or referring the provisions of the double taxation agreement between these two countries, we also have to consult this multilateral agreement, because that is if the provisions have been agreed on the basis of that multilateral agreement, that will be read along with that bilateral agreement. Like I will take example, like if Pakistan has a double taxation agreement with the European Union, and Pakistan and let's say Netherlands has a double taxation agreement, and they have signed that the income from capital gain will be exempt in the country of the source in Pakistan. Let's say shares of a Pakistani company are sold by a Netherlands resident, and its income is exempt under the treaty agreement. So now only treaty will not be the sufficient, and I will have to see that Pakistan and Netherlands, whether both have signed this multilateral agreement, and under that multilateral agreement, whether this exemption is still protected or it is no more available. If it is no more available under the multilateral agreement, to that extent, this treaty provision will be overridden, and now we have to consult that multilateral agreement. So whenever giving any opinion, advice on the basis of any double taxation agreement, please consult that whether the Pakistan and that country both are signatory of multilateral agreement? If answer is yes, then you have to consult the provision of that multilateral agreement, and you have to read along with the treaty provision while forming the opinion. So this multilateral agreement is very important in this aspect. So with the bilateral agreement, Pakistan has 66 double taxation agreement with like Bangladesh, Canada, China, US, Oman, Poland, Qatar. So there is a list of 66 countries for which the Pakistan has double taxation agreement. Similarly, there are also some of the limited purpose treaties because there are, one is the full scope treaties wherein majority of the heads of income, or I can say, have been discussed at how the treatment will be, that this income will be any source, how it will be determined, the source of income, how it will be the rate of tax, what will be the applied. So the mechanism has been provided. So these are called the full scope treaties, and sometimes they are limited purpose treaties, and majority are dealing with the air transport business. And Pakistan has a limited purpose treaty with India, Jordan, Kenya, and Saudi Arabia. Saudi Arabia for Pakistan has initially there was a limited purpose treaty, but now they have also signed the full scope treaty. So the full scope treaty is covering all the aspects. So this will be the overridden, and now the full scope treaty will be applicable there. Similarly, there is one most important provision for the non-resident, because under the law, the section 206A provides a facility that whenever there is any misunderstanding, confusion, ambiguity, or risk of litigation, then the non-resident person can apply to the Federal Board of Revenue and can take the advanced ruling for the application of taxation in Pakistan. So this ruling will be the binding on the tax department, but obviously not binding on the taxpayer. And if even still the taxpayer is not happy with that ruling or that opinion of the Federal Board of Revenue, that taxpayer can challenge in the court or can adopt the other way. But once issued, that will be the binding force on the tax authority. Similarly, the Pakistan source capital gain is very important topic, because any gain arising on disposal of the shares of a Pakistani company, that is taxable here in Pakistan. And in case of the non-resident person, this is very important, because the person, even the foreign companies are having the shareholding here in Pakistan and gain is arising thereon, it will be subjected to tax here in Pakistan under section 37. And whenever we have to consult that whether this capital gain is taxable or not, we also have to consult the double taxation agreement provisions, application of thereon, because in some of the cases the exemptions are there. Like I can give you example that in the case of the UAE, if the UAE resident is having any shareholding in a Pakistani company and earning any capital gain thereon, it is not subjected to tax here in Pakistan in accordance with the provision of the double taxation agreement between Pakistan and the UAE. And similarly, in some of the other treaties, that exemptions are available. This section 101A is very important, particularly whenever we are discussing the international taxation or the things, because this is providing a basis on respect of taxation on respect of indirect disposal of a Pakistani company shares, asset, or anything. And for simpler side, I can say that if a Pakistani company is owned by a foreign company, it is a 100% subsidiary, or majority of the shares are held by that foreign entity. And instead of disposing the shares of a Pakistani company, if the non-resident shareholder disposes of the shares of the foreign company, so in certain situation, that income also becomes taxable in Pakistan, though it is not the direct disposal of the shares of a Pakistani company, but because if we sell the parent co outside Pakistan, and that parent co is principally owning the only asset hire of Pakistan, or it's the majority of the assets are to the extent of that Pakistani company, and the interest which is going to be sold is 10% or the more. In that situation, any income earned on account of indirect disposal will also be considered as taxable here in Pakistan under Section 101A. This is a recent basically provision in 2-3 years back. This law was introduced, and this was internationally, as I already said, this is a part of the BEPS project, that base region and profit shifting mechanism. This provision was considered, and particularly the India was quite ahead, and they formed the law before us. There is one very important case of the Vodafone, although that case was again lately decided in favor of the company, and it was said that because this provision was introduced in the law later on, so it cannot be applied retrospectively. But the concept of indirect tax disposal of assets, this is well recognized concept, and even if the shares of the parent co are sold outside Pakistan, and that parent co is principally owning the asset here in Pakistan, so any gain earned on that disposal will also be taxable here in Pakistan. So this is a basic broad concept of indirect disposal of assets located in Pakistan. So now just broadly, some of the withholding tax provisions are here, where you can see that whenever a person is making payment to a non-resident person, that person is required to withhold taxes thereon. And in some of the cases, these taxes are final discharge of liability. Some of the cases are adjustable. So this table is with you, and obviously this presentation will be shared with you. So you can see that I have tried to cover that all sort of the payments which are related to non-resident person and dealing with our subject that has been provided there. So exemption certificate, there is also concept that if the person considered that the income is subject to not taxable in Pakistan or taxable at a reduced rate, then the person can apply to the commissioner exemption certificate. So whenever a person is making from payment from Pakistan to a non-resident person, so now State Bank requires either to provide the evidence of required withholding tax that has been deducted and deposited in Pakistan, or you have to provide the exemption certificate in case of any exemption under the double taxation agreement, or the income is not subjected to tax in Pakistan, or income is taxed at a reduced rate. So we have to go for this. So coming, we can, because before moving towards the trade agreement, if we can take some of the questions here, particularly in respect of these taxation part or the taxation agreement, that is a trade agreement we will consider shortly after addressing these questions.
Okay, thank you very much. And we have a couple of questions at the moment, although there are more coming. But the first question is from Alina Wadood, and she's saying, if a quarterly amount is being directed into a back office in Pakistan, where the back office is a registered company in Pakistan, will that be taxable? And she continues her question by saying, considering it is recorded as an investment in the balance sheet, because obviously it is not income / sales.
Alina, first thing is that the taxation is always applicable whenever there is a concept of income. If a foreign entity is injecting equity here in Pakistan, so that will not be categorized as an income and will not be subjected to tax this. So this is the one part. Second is, for all of you concerned, I'm just broadening the thing, that if there is also a concept of export of goods or export of services. So if the person is exporting service, because I have not touched these things, I think these have been covered under the computation part earlier. And export of if any person is earning any income from export of services, like you but little bit I can say only because you said that it is a back office. So sometime back office is providing services to the parent co, and against those services receiving certain income from abroad. So this will be considered from income from export of services. So if it is an export of IT services, it is exempt from tax here in Pakistan. Even if it is IT enabled services, it is exempt from tax. But if it is export of other services, these are subject to tax at the rate of 1% of the gross export proceeds. So this is the generally export of services. If it is income, then it will be taxed according to these rules. If it is an equity, it will not be taxable here in Pakistan.
Okay. This other question is from Shabazz Makhloom, and he's saying, how do we determine the geographical source of resident individuals selling goods on e-commerce websites like Amazon, Alibaba, etc., operating e-commerce stores from Pakistan and selling products to consumers living in multiple countries from a foreign country? I think very pertinent question, and
Yeah.
I think a very topical one as well.
Yeah, nowadays it became very important, and I see that trade is becoming very close, particularly with Amazon and everything. Now the borders are becoming irrelevant. So these questions are arising, particularly this basically in response to your question. If I am a seller of goods, I'm selling goods from Pakistan and through electronic medium selling goods outside Pakistan, still it will be considered as export of goods, because the general rule is that if my customer is located outside Pakistan, I'm dispatching goods from Pakistan to that customer, and that customer is making payment from abroad, and that amount is coming through banking channel. The bank is required to withhold 1% tax while crediting the equivalent PKR into that business account. So whenever any person is involved into such type of activity, I suggest to that person that firstly inform to your banker that these payments are coming as an export proceeds. So please withhold 1% tax thereon. And this tax will be considered as full and final tax liability in respect of that income. So this is purely a topic for export of income, and it will not be topic for determining the source, because this is a although the goods have been dispatched from Pakistan by a resident person to a non-resident person, so this is purely a topic for export of goods.
Shabazz has clarified his question further. He's saying that goods are procured from foreign country and sold in foreign country as well.
This will be purely foreign source income. If I am some of the entities like I've also dealt a Pakistani company, let's say procured a power station from Germany, and that power station was exported to Afghanistan, and that was installed therein. So without having involvement of any Pakistan route, that whether or not those goods were coming into Pakistan, not exporting from Pakistan, if directly goods were dispatched from Germany, landed in Afghanistan, and then the installation work was there. So this is purely a foreign source income. Yes, now the rule will come, the person earning income is a resident person or a non-resident person. If the person earning income is a non-resident person, so this is a foreign source income, this will not be taxable here in Pakistan. But if the person earning income is a resident person, if a Pakistani company is doing all this thing, or Pakistani individual while staying here in Pakistan for more than 182 days is doing all this activity, this will be taxed here in Pakistan as a foreign source business income, and the rules as we discussed earlier will apply there. So this will be foreign source income and rules will apply accordingly.
Okay, thank you very much. I think that's all we have, on the questions tab right now. I think this question was very, very interesting, and clarified my concepts as well. You know, thinking about doing an online business. So I think very valid question, and it'll definitely help. So I think let's proceed further. Shahbaz has once again thank you, Avesa. I think very prompt, pertinent, and to the point answer to the question. So thank you very much. Let's continue for the last leg of today's session, I hope. Yes.
Yeah. Before moving that, Harun sir, if you will take advantage of this opinion, I will charge fee whenever you will earn the profit from that business.
All right. Okay. But I hope I get a professional to professional discount also.
I said instead of so boring discussion of the taxation, we can at least laugh for a certain period. So moving towards the trade agreements, basically these are comparatively different than the tax treaties, and these are dealing with the overall arrangement for certain, I can say, the benefit of economics, trade, or other things. And under these categories, there are a number of categories for which the trade agreements are going to be signed between different, I can say, the territories are the thing. One, some are the regional trade agreements, and some are the bilateral trade agreement, and similarly the free trade agreement, and also the preferential trade agreement. These are the categories of the trade agreements for which the Pakistan is the signatory of that. So if I'll see the regional trade agreement is the first category. The Pakistan is, we all know that Pakistan is the part of the SAARC, and SAARC has signed a software agreement in 2004 that was signed in Islamabad, and particularly there was increasing the coordination of the trade with the within the SAARC countries, and particularly removing some of the restriction or providing facilitation on the cross-border movement of the goods and also the persons for these services. Similarly, providing a competition, fair competition, and not restricting any territory for providing those services, or any hurdles or the tariff duties or the things. So these have been signed between the SAARC countries in 2004, and Pakistan is one of the signatory of that agreement. Similarly, there are certain bilateral trade agreements basically, and like Pakistan has signed US for trade and investment trade agreement. Pakistan and Afghanistan has a transit trade agreement. Pakistan and Malaysia has trade agreement on certain goods and services. So these are the specific agreements for specific purposes and providing some of the facilities, I can say, or some of the relaxation amongst the trade or certain activities thereon. So these are the Pakistan signed the bilateral agreement. And there are also the free trade agreement, and that is only with the China and the I can say the Sri Lanka. These are the two countries with whom Pakistan has signed. With the China, there are two agreements: one for goods and investment, and one for services. Basically, under the free trade agreement, there are certain preferential treatment for the tariff, for the custom duties of the goods, for the movement of the persons, for the movement of the visas, and providing facilitation, equal opportunity, like if the Pakistani resident is doing business, and similarly, if the resident of the other country want to do the similar business, the similar facilities will be available thereon. So these agreements are covering such type of facilities and providing to these. And third is one of the preferential trade agreement. Pakistan has signed three preferential trade agreements. This is one is the Pakistan-Iran, other is Pakistan-Mauritius, and a third one is Pakistan-Indonesia. Under the basically, what's the difference between the this free trade agreement and the preferential trade agreement is that in the free trade agreement, all goods or services are covered under that agreement and can be, I can say the terms and conditions related to all goods will be considered according to the agreement. Whereas in the preferential trade agreement, a positive list of goods is provided that these goods and services or activities are eligible for these concessions. Whereas in the free trade, all goods are eligible for these concessions except for the negative list provided in that agreement. So in the bilateral agreement, there will be a negative list, whereas in the preferential trade agreement, there will be a positive list that these are the eligible goods or services for which these agreements will prevail. Some of the features of the Pak-China trade agreement are that under that agreement they have provided the free market access to services and the service provider. Similarly, the same treatment as the national of the Pakistanis is eligible for making any trade or the activity. The similar treatment has been provided for the Chinese national, and some of the additional commitment for providing between the some of the trade zones or the areas have been provided thereon. Similarly, for the goods and transport, the free access movement has been provided. Some of the hindrances on the import or the custom duties relaxation has been provided. Free trade zone have been established by with the under these free trade agreement, and some of the cooperation and harmonization equivalents have been made, and promotion side has also been considered that the goods will be promoted. And so these are the main features. And with the Pak Malaysia, that some of the reduction on the tariff has been provided. Similarly, free trade areas have been established under that agreement. Market access have been provided to those countries, particularly on Islamic banking, Islamic insurance, that are the main area wherein these agreements are available. Similarly, educational institution accredited has been provided, and facilitation of investment from entrepreneur from both sides, and some of the custom duties exemption or reduction has been provided in those agreements. And with the Afghanistan, obviously, though there was a certain timing, there was a lot of criticism and the problem therein, because under the Afghanistan transit free agreement, the certain goods were coming and there was no custom duty or the taxes were applicable thereon. And once the container was coming here and the movement was made and those goods were going and entering into the Afghanistan through our land route, that import was made through the ship, and then the from the Karachi to Torkham, the goods were going into by using the land route and then entering into the Torkham. So these were the facilities which were provided there in wherein the most of the services, local transportation, telecommunication, and transit trade condition was provided, and these facilities were provided. Although under that agreement, some of the criticism was there that because the goods were coming duty free, that were not going to be charged in custom duty here in Pakistan, and the transit sometime during the movement, the goods were, I can say, the skip from the travel and utilized here in Pakistan, which was definitely destroying the local industry, or the person who were importing goods by paying the duty, and the other person if it is using this channel, so that the price of the goods were not comparable. So this obviously free transit trade agreement remained under criticism also a certain point of time. But now I think some of the checks and balances have been created, that once the container is sealed from the Karachi, and then the seal is checked at the Torkham border that it is going and entering into the Afghanistan in the same situation, and during the even during the path, obviously some of the checkposts were created or the thing. So this some of the control has been made there on, and currently due to the existing situation of the Afghanistan, the import volume has been reduced, and currently I don't see any problem is applicable at this point of time. So these are the overview of, I can say, the bilateral or the transit trade agreements thereon. So now we can obviously move on the question answer, particularly focusing on any part of the presentation. So we have 10 minutes, so we can utilize these for discussing these questions.
Perfect. Thank you very much. And I think we've done that in good time. So, ladies and gentlemen, any questions that you may want to ask? I think the last section was also very important. I would want to have somebody ask questions about CPEC and what opportunities lie in the light of the trade agreements with China. I think the agreement with Sri Lanka also. I've seen some Sri Lankan participants as well. So if there are any questions on this subject, we'd be more than happy to put up. So please type in your questions. We'll just give you a few minutes. Okay, Javeri Asad is saying, any agreement regarding AJK? Sorry, Javeri, I think you need to elaborate your question. It's not very clear. So, Avesa, you were going to say something?
I was just saying that if anyone can directly question raise, you can open the mic if this facility is available. I'm not sure
Yes,
the administrator.
Yes, it is.
Yeah.
Yes,
can
okay.
take
So
direct
if you want to
question.
ask a question verbally, please raise your hand. I'll be more than happy to unmute a few individuals. I think that'd be fantastic. So, Javeria Asad, if you want to ask this question, I can unmute you. Okay, here we go. Javeria, we have unmuted you. You can unmute your mic and ask a question if you like. Anybody else who wants to ask a question verbally, please raise hands and I can unmute them as well. Okay, waiting.
There are two situations. Either I am unable to explain the things, or the people are so intelligent that they understood everything.
No, I'm sure the later will be the truth. And I think you explained it very well as well. There are, these are situational questions, and I think only if somebody is in a situation like this would be able to ask relevant questions. But
any of my colleagues from outside Pakistan, because as you mentioned that some of the people are from Sri Lanka or the thing, so I'll be happy if they have some of the idea about the Pakistan tax or even any question, not from today's topic or any of the topic related to tax, I'll be happy to answer.
Okay, so Daniel Zia is saying that I don't know why my name is showing as Javedi. Maybe I joined through webinar ID. Yes, Daniel Zia, I think you used another person's account to join in, but never mind. If you want to ask a question, we have a hand raised, and that's Irfan Ali. Irfan, I'm going to unmute you. You can unmute yourself and ask a question.
Hi, this is Irfan. Am I audible?
Yes, now you are.
I have two questions. First is regarding transfer pricing. Before Pakistan tax, we have a session with our Sri Lankan ENY people. They have adopted so many procedures to cope with the unfair transfer pricing charged by the multinational to their foreign subsidiaries. Is there any mechanism to cope these unfair transfer prices in Pakistan, which are being charged by the foreign multinational to their local subsidiaries? Secondly, preferential free trade agreement with Afghanistan. Sir have mentioned, Awais have mentioned exactly the problems which we are facing because of this trade agreement with Afghanistan. What steps or measures Pakistan is going to take against those practices which are damaging our economy? only because of these agreement with Afghanistan. Thank you.
Thank you, and very right question from both. Firstly, I will say because this is a recent actually phenomena of this checking the transfer pricing concept. So Pakistan has also introduced provisions related to this transfer pricing, and Section 108 is the relevant section. Actually, that provides number of reporting. One is we call it country by country report. Our abbreviation is CBC. One is the local file and one is the master file. These are the three documents which are required to be filed under this reporting mechanism. And under these reports, we submit the policies for transfer pricing of goods and services traded between the associated entities. So if there is any trade or business between the associated entities, we have to provide firstly the policy. What is the policy for charging the pricing of those goods or the services? So that will be documented in the local file and also in the master file. Local file will be prepared by the Pakistani subsidiary, which is using those trade or services, and will be submitted to the FBR, Federal Board of Revenue, on annual basis. Similarly, master file is prepared by the parent co, wherein all the policies and the procedures have been documented, even with the quantum of transaction, number of transaction, mechanism, and that will be submitted with the tax authority of the parent co. If the country of the parent is also signatory of exchange of information with the Pakistan, so then that report will be shared by the tax authority of that country directly to the Federal Board of Revenue here in Pakistan, and that will be used. But if the country is not signatory, then the local company is responsible for providing the copy of even master file to the Pakistani tax authority. And similarly, the CBC report is also required to be submitted. So these provisions are quite well applicable in Pakistan under Section 108, and now the companies are filing all these requirements wherever applicable, because there is some of the turnover limit is there, that on the basis of 500 million euros or plus the turnover is there, then this file will be prepared. If local turnover is 50 million euros, the transaction volume is that. So by considering all those requirements, the companies are filing wherever applicable. This is the first part of the question. And the second is regarding your Afghanistan trade. As I already mentioned, that now the quantum has already been reduced, or I can say the very negligible now. Yes, in the past, it was quite damaging for our local industry, but now even some of the controls have been devised properly. The quantum has been reduced. So currently, I don't see much more problem on that account. But definitely, whenever there is a problem, if you will have witnessed that some point of time, even the tax authorities visited the markets and was seeing that whether the goods imported have been imported after making proper duties and the taxes, or there is any smuggling element or that. So that are the basically elements through which this can be curbed or can be reduced. But definitely we have open borders with the neighboring countries, and with the passage of time, we are also fixing some of the cable wires of, by sealing the border. So this problem can be solved. You have been even sometime in the news, you will be witnessing them that from the Balochistan border, some of the oil products are coming through. Even the small vehicles are moving through from the other country and coming into the Pakistan. So similarly, on the Afghanistan side, our border is quite large and some of the open areas are there. So definitely these are the problems. but surely with the passage of time, the government is controlling those things and reducing this such bad practices.
Thank you very much, Vaisab. And not a very, I mean, topical question about taxation, but more about economy. I personally have a very, some deep interest in CPEC, and the previous government. It was all being said that we are losing a lot of opportunities for revenue, losing a lot of opportunities in the name of collaboration with China only. Do you think that we need to have a policy in place to attract Chinese investors to bring money in, set up industries in Pakistan rather than just making Pakistan and other markets like Sri Lanka and Bangladesh only trade zones? I mean, something that could help industrialization in the country. We only saw probably one or two textile buyouts. For example, Masood Textiles was probably bought out by a Chinese group. So, but very little, investment coming into, these South Asian countries was noticed. So, do you think there's any policy change that the government can make which could attract investment, from China?
Yes, actually, this CPAC, obviously, the Pakistani government is seeing it as a game changer. If you see the government slogans on the CPAC, and that was that it will attract a huge foreign investment and it will also provide a lot of business opportunities to the Pakistanis. And I can say the most because Pakistan economy is very small as compared to China or the other developed nation. So even if there is a very negligible component of any of the activity, definitely our activity will increase drastically. Like I will take an example that even if the only transportation business is attracted through the CPAC while picking the goods from the China border and dropping it at the Gwadar port, there will be a huge business on account of this activity, even just for a transportation of goods from China and keeping going towards the Gwadar. And the Pakistan economy can move on this only one line of business. And this was the one thinking of the, I can say, the policy makers. And the other side was that under the CPAC, obviously, that China has committed to establish a number of industrial zones here in Pakistan. Although due to some, I can say, the political changes, this project has been slowed down, but I'm hopeful this will not be the closed, rather it is a slowdown. And at any point of time, this industrialization and establishment of the zones, obviously this will attract a lot of foreign exchange immediately on the ones in the installation phase. Then by making installation of such industrial zone, obviously we will be able to get the good employment opportunities. So economic activity can multiply on account of this project. Yes, on account of, I can say the fear side is that, like I also made comment at one point of time that even if, like Afghanistan transit, we have suffered a lot and our industry was impacted a lot. And if for this under the CPAC project, if the Chinese goods which are moving from China border and going toward the Afghanistan, and even if from the side some of the goods are dropped here in Pakistan, and this some can destroy our local industry, because we have to make a lot of control and check and balance so that no good can come into Pakistan without making payment of the custom duty or without going through this goods clearance model. So that is the only thing which definitely the government has taken care of all those goods. The mechanism have been devised even for the security reasons and for the other reasons. So some of the mechanism was devised for all these activities. So overall basis, yes, For Pakistan economy, CPAC is one of the necessity or need of that time. And particularly in the situation when we are in a difficult time, any such improvement on such project can improve our economy on a multiplying factor. So overall, I visualize this project that yes, while making controls proper on that system and also attracting the foreign exchange in a very amicable manner in the required industry, so we can gain a lot from this project. On the other side, just one of the comment, because one of the problem I can say, you referred the some of the textile unit, and I'm also witnessing, because the Chinese people are much more hardworking than us. Even on the labor side, if their one person works and approximately equal to our four persons job. So when we see the expectation of the Chinese industrialists is much more as compared to performance capacity or capability are our people. So we have to equip ourselves so that we can compete with them and we can get the employment opportunity.
Very appropriate. Thank you very much. And I think I mean, coming specifically from our participants from Bangladesh, a lot to learn from them also on how they've developed their textiles segment. I mean, and almost turned around the country just on the basis of their textile exports. Phenomenal success story, I must say, and a lot to learn from them. I think a final comment and a question from Suleiman Sima, which is also a part of ACCA's recommendation for fair taxation across the globe, and that is about simplification. And Suleiman is saying that he sees similarities between UK tax and Pakistan tax, but still Pakistan tax is very complicated as compared to any other. So, is there any effort underway to simplify the ACCA's this holy scripture? Okay, is there a way? I know Shabaz Narisa was trying to do something, but it never materialized probably.
Before going into the question, Arun Sahab, I will also add on, like, frankly, the Pakistan should learn from the Bangladesh. And one of the things, because we being a finance professional and we are working with the industry and the things, I'm very happy. I can share one thing in what I heard and learned from Bangladesh, that the long-term business contracts and the ownerships are capped. Policies are capped for a long-term basis. Even the maturity of the businessman is much more as compared to the Pakistani businessman. Here, the partnerships in Pakistan, even in some of the part of the India, do not last for decades or long-term basis. Whereas in Bangladesh, I witnessed the number of partnerships are for a very long period, having a very good mutual trust upon each other and working jointly for the benefit. So on the policy side, obviously they have provided a lot of facilitation. At one point of time, you would have a witnessing that the people were dismantling their units from Pakistan and were shifting towards the Bangladesh. And they created a huge industrial zones, attracted a foreign investment, and particularly due to the good policies and facilitation provided by the government side. So same has to learn to the government of Pakistan, that how, as you rightly pointed out, that our tax laws are very complex. Even on the, I being on the different professional side, I have a number of times pointed out to the Federal Board of the Revenue that even if you will see the income computation part in the corporate side, you have to compute the normal way, normal in tax, you have to compute the alternate corporate tax, you have to compute the minimum tax, and then whichever is the highest. I say, in which part of the universe is such more comparison as you are introduced in the law. Yes, if the people are misusing any provision, you have to find those people and fix the problem instead of making the law so complex that a fair taxpayer or a fair businessman cannot cope up with all these things. So this is the need of the time that the government has to think, and all professional bodies should work together and sit with the Federal Board of Revenue, and because our problem is, one of the major problem is that the Federal Board of Revenue, who is the tax collector, that are supposed to be the policy maker. They are the persons who are making the law changes therein, and whenever they go into the assembly proves according to that. So because they find the easy way of collection instead of streamlining the process, so the policy wing should be separated from the Federal Board of Revenue. And the current government has, when it was started in 3.5 years earlier, they announced this thing. Initially, one of the policy wing was introduced, but effectively the passage of time, all has forgotten, and again the same system of the Federal Board of Revenue, being the owner of the law, is making all these changes. So this is the time changing, obviously, requirement, and the simplification of law is one of the basic need of this time.
Thank you very much, Awais, and I could see you flexing your muscles for the upcoming budget sessions and budget recommendations. I could see you flexing your muscles. So I think very positive conversation, and I think it's very forward-looking, very sort of business-like, very professional-like, and that's exactly what we are doing, sitting here together till 8 o'clock. Discussing, what good to learn, what good to bring in, and this helps multiple, multiple countries, multiple participants from multiple regions. So thank you very much, Awais, for your precious thoughts, for your very elaborate, interesting session. There are participants who have now started to praise you, and I if you can open up the questions box, you can go through the thanks and people trying to get your contact, so you can go through all these comments yourself. But nevertheless, I think we can't thank you enough for taking time out, for spending time with our participants.
I take it as a professional responsibility. So thanks to all of you. Obviously, in the start, I said that it's a combined learning process. Obviously, you provided me opportunity to discuss the things with such a good professional and wonderful audience. So thank you, all of you, for joining here with me, for sparing time and listening the things and sharing your view. So thank you very much, all of you. So thank you. And
thank you very much. And before leaving, we just make another announcement once again, and that is about the next session, our next and last session on Pakistan tax. Because of Ramadan, our timing are going to change. We're going to start our session at 3 o'clock. The timing will be reduced, not 2 hours, but 1.5 hours. So we start at 3 Pakistan time, and we will conclude the session at 4:30, again Pakistan time. So looking forward to seeing you on Monday at 3 p.m. Pakistan time. Thank you very much, Awais. Thank you very much, all the participants. Take good care of yourselves, and Allah Hafiz.